Hey guys, today we're talking about estimated taxes. This information is very vital for self-employed if you're full-time or part-time, independent contractors, freelancers, small business owners, Lyft drivers, Uber drivers, DoorDash drivers, or any form of business owner. This information is for you. Stay with me to the end of this session as we learn together on the topic of estimated tax, and we will be discussing the definition of estimated tax, who has to pay estimated tax, who doesn't have to make this payment, when do you have to make the payment for the estimated tax, how do you calculate how much you should be paying for estimated taxes, what happens if you don't pay this amount of money, and what you should be doing to track whatever amount you pay in the course of the year. If you are just watching my channel for the first time, thank you for watching. This is a channel that is focused on helping you with effective tax planning, minimizing your tax liability, financial planning, and also for immigration matters, which we will be talking about down the line. If any of these topics that I've just mentioned sounds up what you're looking to get, please click on the subscribe button and also on the notification bell so that you are alerted whenever we release a new video. Stay with me till the end and we will be right back. Thanks for sticking with me. Today, we're talking about estimated taxes. My name again is Toby Agbejimi, and I'm a CPA at Doballc Tax and Accounting LLC. What is estimated tax? Estimated taxes are actually taxes that are paid to the IRS by self-employed individuals. Pretty much anyone who does not have an employer withholding tax taken from their income, or anyone who doesn't have enough withholding taken out of their income, which means that the employer is taking less than is required. And the reason it is called estimated is because you're actually estimating how much income you will make during the year and paying taxes on that amount. Who has to pay estimated taxes? Individuals, including sole proprietors, partners, and S-corporation shareholders generally have to make estimated tax payments if they expect to owe $1,000 or more when their return is filed. Businesses that actually file as a corporation generally need to make estimated tax payments if they expect to owe $500 or more in taxes for the year. So self-employed, whether you're full-time or part-time, independent contractors, small business owners, freelancers, Lyft and Uber drivers, as long as you get a 1099 by the end of the year, meaning you don't get a W-2 or you have a W-2 and then you receive 1099 at the end of the year, you are one of those who should be making estimated taxes. You may also have to pay estimated taxes if you receive untaxed income, such as interest, you receive dividends, alimony, capital gains, prizes, even awards. Okay, you will be required to make estimated taxes. Let's talk a little bit about who doesn't have to pay this tax, who doesn't have to make estimated taxes. You do not have to pay estimated tax for the current year if you meet 3 conditions. The first condition is if you had no tax liability for the prior year, which would be, right now is 2021. So if you had no tax liability in 2020 and you were a citizen, a US citizen or a resident for the whole year, and that prior tax, which is the 2020 tax, covered a period of 12 months, then you don't have to pay estimated tax. So that means if you had no tax liability for the prior year, if your total tax was 0, or even if you didn't have to file an income tax return at or you may not need to pay estimated taxes. In addition, if you receive salaries and wages, you can avoid having to pay estimated taxes by asking your employer to withhold more taxes from your earnings. And to do this, all you have to do is fill out a W-4 with your employer, an updated W-4, and that way the employer knows to take more money from your income. Let's talk about when do you have to make this payment. Estimated tax payments are paid 4 times in a year as follows. So any income made between January 1st to March 31st, April 15 is the deadline to make the estimated tax on that income. Any income made between April 1st to May 31st, that income is due for estimated tax by June 15. That's the deadline. June 1st to August 31st, the deadline is September 15, and September 1st to December 31st, the deadline is January 15 of the following year. So if any of these dates, April 15, June 15, September 15, or January 15, if any of these dates fall on a Saturday or falls on a Sunday or a legal holiday, the payments are due the next business day. You can actually make payments early. When I say early, I mean earlier than the deadline date. If you prefer, you may choose to make your payments on a monthly basis instead of just 4 times in a year. And all that matters here is that just make sure that your payments are made before each deadline. How then do you calculate the estimated tax now that you know when it is due for payment? The easiest way is to simply divide your tax liability from the previous year. Right now, it will be your tax liability from 2020. You divide it by 4. And you make each of those 4 payments in each of the stated quarter. Alternatively, you can estimate your tax liability based on what you have earned thus far in the year, and then you compute your estimated taxes on a quarterly basis using that number. The IRS actually has a worksheet that can be used to figure out the amount that you would be due to pay for each of those quarters. But at Doballc Tax and Accounting, we help you minimize your tax liabilities, and we also help you calculate your estimated taxes automatically, and you get a voucher included in your tax return, which you just have to a check copy to it and mail it to the IRS each quarter. You don't have to do no calculation or make any other estimate. We are here for you if you file with us. That is the benefit of filing with us. Let's talk about how do you make this payment. You know when to make the payment, you've estimated, you know how much you should be paying. Then how do you make this payment to the IRS on a timely basis? You can pay estimated taxes online by going through the irs.gov/payments. Watch out for my next video. It's going to be an update to this particular topic. And in that video, I will be doing a screen share showing you my screen of how to make estimated tax payment. The reason I'm doing this is because some of you are visual learners. I am a visual learner. And I believe that when you see me go step by step, you can as well follow through as I do it. That way, you don't have to need anyone to help you pay your estimated taxes. You can do it by yourself online anytime and every time you deem fit. The second way to make payments to the IRS is for you to fill out Form 1040-ES, and then you mail it along with the check to the IRS office that is closest to you. At Doballc LLC, we have the 1040-ES voucher already, inclusive of the address where they need to mail that to. And all they have to do is just enclose a check, and boom, they send it to the IRS. What happens if you don't pay your estimated tax? First, you are going to have a large tax liability that you will have to pay to the IRS. And the second thing that happens is you will have to pay interest and penalties on the payment of your estimated taxes if you don't pay your tax liability in full by the deadline. Although there are actually situations where penalties can be waived, and there are 3 of those situations. The first one is if you owe less than $1,000 or you have paid at least 90% of your current year tax liability or 100% of the prior year tax liability, whichever is smaller. The second way that the penalty may be waived is if the failure to make your estimated tax payment was caused by a casualty, disaster, or other unusual circumstances in such a way that it will be inequitable to impose the penalty, then that penalty could be waived for you. And the third scenario is if you retired after reaching age 62, or you become disabled during the tax year for which estimated tax payments were required to be made in the preceding year, and the underpayment was due to reasonable cost and not that you did it intentionally. It wasn't, if it's not a willful neglect, then you may be waived from having to pay the penalty. How should you track what you have paid? After you start paying estimated taxes, guys, be sure to keep a separate record of the date and the amount you pay for each period. If you don't keep accurate records, it can take you longer to prepare your income tax return, and you may even miss out on one or more payments that you already made. So if you pay estimated taxes, be sure to claim credit for them when you file your tax return. Because what happens is if you end up paying every month of the year, maybe you choose to pay 12 times in a month, when you're filing your tax, each window for each quarter, whatever you paid during that window is going to be added together, and it will be entered as what you paid in each of those quarters individually. Let's summarize. The key points about the estimated tax, because make sure that this topic and this discussion is holistic enough that there will be no confusion. So the key takeaway from here is that estimated taxes are payable every quarter to the IRS by those who are self-employed, or those who don't have withholding tax taken on their income, or those who don't have enough withholding tax taken by their employer from their income. Estimated tax can also apply to anyone who receives additional untaxed income, such as interest, dividends, prizes, as we have stated initially. And the simplest way to calculate your estimated tax is simply by dividing your tax liability from the previous year divided by 4. And you can make your estimated tax payment online or by mail using Form 1040-ES. If you do not pay by the deadline, you can be charged a penalty and interest on the unpaid balance, although there are waivers for certain circumstances, which we have already discussed. And the last thing that is very crucial to note is when you do make payments, make sure you're keeping a record of the date and the amount that you paid, because they are really going to be useful when you're filing your tax in the following year or in the tax season. If you found this video helpful, even if it's just a tiny little bit, hit that like button for me and subscribe today if you want to see more videos that can help you save on your taxes and help you make better tax and financial planning decisions. The more you give it a thumbs up, the better the algorithm will make this video accessible to the people that need to make estimated taxes. Thank you for watching. Remember to give me your feedback also in the comment section. Let me know if you're always paying your estimated tax on a monthly basis, or if you do that on a quarterly basis, and how you're keeping tab on that. My name is Toby Agbejimi, and I'm a CPA at Doballc Tax and Accounting LLC, and we're looking out for you. Thank you for joining me today. I'll see you in my next video, which will be the screen share of the exact step-by-step on how to make the payment online. I'll see you in my next video.